Hi, welcome to the Market Alert for Thursday the 13th of July 2017. Just a quick reminder, this is the last Market Alert until a week on Monday, so no Market Alerts for next week, just to let you know. If you've not seen any come through, that's because I will be missing in action just for the 1 week, which is the first time I think in about 2 years. So just again, week on Monday, all services will be back to normal. Right, yesterday in the pound we had the buy signal. Market moved higher, and of course you can see there from the green that it hit the scalp. These signals here that we see in the afternoon, they're all surrounding Yellen's speaking just prior to her speaking, and then during her speaking as well. But like I've always said, if you made money on the first trade, then you don't need to worry about those that follow later on, unless the market's in a decent trend, of course. In the daily chart on the pound, you can see that the market's still fairly sideways. You've got this sort of sideways thing going on here, market stuck there, and also we've got some resistance at these levels as well here. If we just have a look, you've got the resistance here at 129.64. that needs to be taken out, already at the high of yesterday, but the market needs to really get through that 129.26 in order to move higher there. Let's have a look at the news while we're here. Might as well cover it all. We've got the Bank of England credit conditions survey. That's medium impact, so no big deal. And then over to the US for unemployment claims. We've got PPI and also core PPI from the US up to 130. After that, again, we've got Yellen speaking at 3 p.m. and then they're also wheeling out Evans and Brainard as well. Now, yesterday we saw the market make a new high when Yellen was testifying, and the reason for this, I'm just going to switch screens for a second, and here's the reason. We had a situation yesterday where Yellen spoke and she said that she didn't see any need to continue with the aggressive raising of rates. Well, I'd hardly call it aggressive myself, but I suppose when they've not been raised for 10 years or getting close to it, then it would be deemed as aggressive when you're raising them every quarter. So this created a buying spree with stocks, bonds, bullion and Bitcoin. So it looks like she's taking a foot off, and as I've said before many times in the Market Alert, I can see interest rates going the other way when this lot starts to unfold, and that's the only reason why she's increased interest rates to begin with. So no surprise there whatsoever. And also, whilst we're here, this is just laughable. This is Fed Chair Janet Yellen warns Congress US debt trajectory is unsustainable. You're not kidding then. I mean, it's just laughable. This is, it really is. It's well worth having a look at this as well. Have a look at some of the comments as well. Some of them are just absolutely brilliant. It's just, I mean, why can everybody else see it and they can't see it? It just never ceases to amaze me. And also, interestingly enough, why wasn't she talking about this when Obama was in office? In particular, is last year, where he'd actually doubled the debt in the previous 8 years of his tenure as president of the US. It's just it's laughable. And so did Bush. Nothing was said, but all of a sudden, again, this Trump thing. I'm not a Trump fan. I'll put that out there at all. But it just adds that all of these things just add to the fact that they want to, or going to, drop this lot on him. It's quite amazing actually when you start joining the dots up. So amazing how she's talking about this. It's unsustainable when this time last year it was the same $22 trillion and Obama was in office. Amazing, but not surprising, I suppose. Right, let's have a look at the Dow for yesterday. So the Dow made a bit of a move in the pre-market session. You can see this here. Price is just taking off back through the major supports here at that's the 500 level that we've got here. That's 21,500, and then the market gets to the opening part of the session. Now we've got Yellen speaking at 3 p.m. in the same today, so you don't really want to be in. I'm having a look here just to see if the market had broke new highs, and of course it had. You can see there we got a new record high being put in. See it breaking through there and then switching back. Yellen speaking there, even though the market went on to the scalp. And then we had Yellen out of the way, we had the crude oil figures out of the way, then we had a short signal, and the market gave back some of the gains that it had made, but not for too long. You see the market then sideways coming back down to the 21,500. Notice the build-up of volume in this area here as well, which is interesting. There was some selling around there, and there's no way they're letting the market move lower, and then they start to bring it back. Now the market has already got into a sideways range. You can see how tiny the bars are in this market, and you'll see prices continue this sideways move. And if you've made money in the first part of the session, you know that the evening part's going to be more difficult and quiet. You can see signals coming in and failing, and then we get one that's filled, but then the market is just really tiny. We're at 8 o'clock, there's only an hour to go, and you can see what this trading sort of late on can actually do. You end up with a loser there, and then you've got another trade that's just getting sorted or filled for the last half an hour or so of the trading session. And if there's no volatility, which can be seen here, and you've already made profits on this trade, then there's no point in trying to squeeze something else out, because it's too quiet. You can see it's just very, very quiet. Right, let's have a quick look at the implied volatility before concluding. And on the implied volatility, well, here we go again, back down to the 798 from 840 on the previous day. I think we got the bottom in here down at the 762. It looks like this could be retested if Yellen's speaking again today and her comments are dovish once again. Then we're likely to see the market go and make a new all-time high in the Dow once more. And in fact, that's something I've forgotten to look at. We'll go and have a quick look at the Dow daily chart before we finish off here. Okay, so the Dow is moving higher on the overnight. You can see that here. Need to take out the recent high, which is also the all-time high. Is 22,000 on the cards before this market starts to fall apart? Is the question. We're at nearly at 21,600. As you can see there, we've got 21,582. Market above the 76%. We might as well remove this and this, keep things clear, and let's see how things progress as we head towards the what usually is a relatively quiet few weeks, obviously because of the summer breaks, and see if the market can take out the 21,582 and head up towards the 22,000 before we start to see things falling apart. Right, that will do it for today, and like I say, for the next week we'll be missing, but everything back to normal a week on Monday. If I do see something, obviously I'm not going to be able to resist having a look. If I do, then I will send something out, in particular to do with the implied volatility, but I won't have everything with me on holes. Sometimes it's just nice to leave things well alone and then come back with a fresh pair of eyes. Right, that's it. As ever, thanks for watching. See you in the next one.